Hey coconuts, welcome back to our Tuesday's weekly market updates. Rakesh,
Anthony.
And Jefferson.
all of us are here again for this week, and we have a fair bit to talk about, guys. I tell you
Oh,
what,
we
firstly,
started reading the
obviously,
news again this year.
no, I have not. I have not. I am very scared to even open and look at my portfolio. And obviously, that's the first topic we're going to be talking about. Redness everywhere in almost every market, right? That's, I'm sure, the big topic that our listeners want to hear about. We'll then move into a couple of shares, right? Specific shares. We realized that we talked a lot about macro in the past 3 episodes, and we're going to be talking about that a bit here as well. I mean, we do have Jefferson, so it's probably good to have and talk about macro. But we'll move into Tencent and their stake in selling C, as well as a new company that just came across called Synopsys in the semiconductor industry. All right, I think to get started with Jefferson, is your portfolio red as mine?
Yes. I'm pretty sure everyone's portfolio is very red. My crypto portfolio is down
It's red.
massive. It's red as
Oh
well.
shit!
Yeah, I don't even want to open it. Yeah, it's
Not buying the dip.
yeah, buy and forget. Yeah, that's the new
Oh
Yeah,
my
buy and
expression
god!
out
forget.
there.
Buy and forget.
Yeah,
I
yeah,
DCA all the way. I DCA all the way until I got nothing to DCA anymore.
You're right. There,
yeah.
payday
It's
coming. Payday coming.
barely coming. But I think you'll be scared as well, right? Because like everything is so red, you'll be like, oh, is it a good time to buy in or what's not? Yeah.
Next month,
Absolutely.
Yeah.
payday again.
Yeah. Next month wait for payday again and go again.
My salary is my DCA in, then I DCA out.
Oh my god. Yeah, but Jeff,
yeah.
tell us a bit more. What's happening here?
Yeah, so as everyone knows, it's been redness everywhere from the equity to crypto. There's also rumors that the Federal Reserve has been a lot more aggressive in terms of their quantitative tightening policies as well, and may even hike interest rate 4 times in 2022. And that was circulated last night. That potentially
But
could have
question
become
here, Jeff.
yeah.
With regards to that, I thought when they stated this in December or something like this, they already stated they were going to raise it 4 times in 2022. So how did
I
last
think
night's thing differ?
Right. I think it wasn't 4 times.
Yeah, I
I
think it
might
was
be wrong, but
3.
it was three. Yeah.
Ah, got it.
So yeah.
Yeah.
So
So
with
zero
it
point two
having
five
to
percent just kills the market. Right? It's ridiculous.
yeah. Um,
One.
it basically sparked a sell off overnight. We sent the benchmark 10-year Treasury briefly above 1.8%, and nobody likes that. Yeah. It
Mm,
essentially signaled to the market that hey, inflation is a big thing that the Fed is looking at right now, and
Mm.
um, why is there a need for the Federal Reserve to go out on the
do
news
this.
and circulate that we are going to do it 4 times in 2022?
Mm,
Definitely not
Yeah.
not the best kind of thing. Especially in the crypto space. Yep. You see a shift away from excess liquidity and accommodative monetary conditions, having to become a structural headwind that we have highlighted in the past couple of shows as well. And now it appears to be coming to a head. Yeah. And that's going to be a
Actually,
thing that's going to happen. Yeah.
yeah, actually, I have a
Yeah, Anthony?
question, right? I mean, we think what 3, 4 episodes that was like a month ago. We were talking about, oh yeah, it's 3 rates is a big thing. It's 3 rate hikes is a big thing. Now it's four.
mm.
I mean, is there some sort of like Speed of change? Like within a month, they are proven wrong and they need to change it again, right? Because because that's a bit scary. I mean, you think about it, right? To me, it's like, oh yeah, they are planning for the next 2 3 years. They know roughly what they want to do, and
Yes.
I mean, if you change your plans every month, that's not a good look on you, I would say. So I was thinking,
Mm.
is this something that could possibly be also scaring the market slightly? Like, oh wait, the Fed doesn't really know what they're doing. They don't really have control. We need to kind of be a bit more careful.
Yeah, I think one of the things is that because this came on the back of when the Fed released the transcript from the December
Mhm.
meeting, right? So it became
Mm.
clearer as to what Pora was actually saying. And if you look at, say, the implied volatility in the market itself, just in the equity space, you see that there's a disparity between the low rates and high implied vol as well. So given the fact that inflation has been robust in a couple of months, I think that the Fed has been more concerned to which that rates should fundamentally be a lot higher as well, and they essentially took the opportunity to just go out there and be on the hawkish endeavor, right? I mean, this is probably one of the best times for them since they just released the transcript. Yeah, I don't think that they are getting anything wrong here. They probably weren't too sure whether it's 3 or 4. Honestly, it doesn't make much of a difference, but it's just noise from the markets, right?
It's
When traders
perception.
start hearing, yeah, exactly, yeah. So when the traders start hearing like four rate hikes instead of 3, it sort of like signal that, hey, there's gonna be a higher use, but we all anticipated that in that sense.
Yes.
So
Mm.
in fact, I know that traders, investors have already positioned themselves, that like the real money managers have already positioned themselves for higher rates. So that's not too much of
Mm.
a concern, to be honest. Yeah.
Got it. And just to clarify here, right? The 3 to 4 obviously is a bit, for me, a little uncertain, right? Like the Fed maybe got some data in December and were like, you know what, we need to do it over 4. Or could it be that they're looking to still increase the rates, but instead of doing it with a higher slope, they do it over lower slope with 4 rate hikes instead of 3, right? So effectively the rates are going to maybe go up the same, but just on a gradual state in 2022. Like that could also
Right.
be an opportunity, right?
Right. So I guess you are trying to say that whether the incremental amount by the end of 2023 uh will be the same if it's 3 hikes or
Yes.
4 hikes, right? That's what you're suggesting.
Yes.
But the thing about the central bank, or most central banks, is that they always have a fixed incremental increase whenever they do a rate hike itself. So
I
like
see.
usually in a form of 25 basis point for the Federal Reserve. So it's just more of like what Anthony is saying, right? You get that 25 basis point extra in the year itself, and what does
Mm.
that mean? Yeah. But I think is more so where the participants of the market basically judge that the appropriate timing of the balance sheet runoff in the US will be closer to that of the policy rate lift off than the committee's previous experience. So they didn't. I think in the past couple of years there wasn't a clear year where they actually sort of say we are going to do every quarter we are
Mm.
going to do a hike in addition to this whole balance sheet runoff that's going to happen in the next couple of months.
I
So
see.
the Fed is essentially trying to play the game to see how fast inflation will then moderate, right? If it's slower than expected, then the policy is really not in the right place, and definitely will have to be more. I have to definitely be moving quicker than and more aggressively than the market's priced in that sense. Yeah.
Okay, wait, sorry, two questions. One,
Yeah.
just now when you're talking about balance sheet runoff, that's the tightening part of reducing the size of the balance sheet and all of that,
Yep.
right? Which
Yep.
we talked about previously, and that's the precursor to the interest rate hike.
Yep. That's right.
Mhm.
Okay, good. Then okay, we're done. I think I'm done with the boring econs part. Like I don't want to go back to micro 101. Crypto,
Hey,
right?
it's interesting. Come
um,
on. Hey.
yeah,
But,
it's
but I
intellectually
mean,
interesting. It
yeah.
doesn't it doesn't help my portfolio. So never mind. Crypto.
Yeah,
Full
okay.
focus.
Yeah, I was going to crypto
Uh,
anyway. Yeah, so on the
yeah,
front
yeah.
of crypto, right? Definitely, if you look at Bitcoin, I think there's some form of like buy opportunity right there.
Mhm.
But of course, this is not financial advice. If you look at the charts itself, you can see a double bottom, from September 2020 lows, after having to retrace, um, in Q4 moves up.
Mm.
So right now, if you look at it, historically, a good buying opportunity for Bitcoin is that if it's trading below 2 days, 200 EMA, it's actually a good indicator to say that it's a buy signal. and I do
Okay.
think that potentially there's opportunity right there. So do your own
Okay, wait.
financial
So
research
what?
yourself.
Sorry, what's EMA?
Right. So EMA itself is
Moving average.
basically a form of moving average that you look at.
Got
So
it.
in this case, it's exponential moving average. Yeah.
Got it. Got it. Okay, so
Essentially, you go, you log into an exchange. You draw the squiggly line. You see, got pattern
Yeah.
there. You buy, can ready.
yeah.
You're right. You're right. Yeah.
Okay.
Yeah. Yeah.
But this is not
Yeah.
very good with since I DCA everything already, right? Because I got no more money. Gotta wait for
I,
payday.
I mean, if you're DCA, then it's more of a perspective that you're taking, right? Like if people are actually
Mm,
looking into having to just long Bitcoin, you are more of a trader than a investor in that sense. But it's always
Mm,
good to look out for opportunities in the markets. And in this case, because you with that said, like Bitcoin being a buy opportunity, from my perspective, in that sense, it can also be indicative for you to park more money in there and just ride out the dip, right? Yeah, so that's one of the ways
got
to
it.
see as well. Yeah,
yeah. Yeah, I think it's all a type of market timing, right? I mean, we also talk about, oh yeah, if the market's going down, maybe we DCA a bit more, that sort of thing. It's all a function of the same thing, just different, I guess,
exactly.
magnitudes, right? Yeah.
Yeah.
So
Yeah.
interesting. I mean, to me, it's always like, at least you haven't mentioned like Fibonacci or Elliott wave. They go, oh, but yes, good to know.
Yeah.
Cool.
Okay.
I
But one more about crypto. What about alt L1s? Since I have a lot of those.
I think that for the L1 space itself, I honestly haven't been looking quite a bit at it because I've been
Mm.
um I actually been looking at quite a bit of Web3 tokens related matters like
Okay.
GameFi and whatnot, right? For
Yep.
L1s, I think that it is going to follow a narrative to which if Bitcoin is going up, then your L1s will definitely recover uh, from there. But like I said, there's still many cyclical negatives for crypto, mostly because of the Fed and the halving cycle both being bearish,
Mm,
right?
Coming, right?
So
Yeah.
crypto is basically on the hype cycle, which is way off the highs right now, and yeah, it's just gonna be a thing where it's just market reflects in that sense. If you want to think about it,
Mm.
that's my
got
take
it.
for L1. But I think
Okay.
interestingly, Web3 is something that
Mm-hmm.
will be is super awesome, definitely. But with a lot of regulations coming to kick in, and I think people don't or rather governments don't like what they can't control, right? So if you look at it, where the American crypto regulations are actually looking into uh, trying to regulate the crypto space and Web3 as well, trying to understand a little bit more. That's sort of a
Mm,
signal to me that hey, Web3 is going to take off at some point, but
Mm-hmm.
for now, projects like Sandbox are overhyped in that sense, and maybe it takes a bit of time for the regulators to essentially
got
um,
it.
say,
Cool.
hey, if you can't beat them, then we got to join them in that sense. Yeah.
Yeah. Yeah.
So
Yeah,
that's my
but
current
when they
take.
join them, it might not be sandbox anymore, right? It might be something else.
Exactly,
So
exactly.
Yes.
Yeah,
there's
Yes.
always
yeah,
that risk. But we should talk more
mm.
about GameFi maybe next week. Right.
Yeah, sure. Yeah,
So something I looked at, I'm like, this is rubbish, this is bullshit. I don't like this, and then I just closed.
yeah.
Well, I'm looking to
I
learn,
need
right?
different perspective. Different perspective.
Absolutely. And I think it's a quick takeaway then, right? Everything's red right now. Anthony, what do you think, our listeners can do? We mentioned a little bit here, the opportunities and so on, but maybe we could hear your take.
Yeah. I mean, not financial advice again. Obviously,
Of
you
course.
should
Yes,
always
yes.
take everything I say with like a huge spoonful of salt. But I think really, what I'll do is I'll just DCA, and I think we don't know when sentiment will shift. Right. In two or
Mm,
3 months, it could be the Fed going, oh, actually, you know what, economic growth isn't as good as we thought it was. I would rather prioritize that over controlling inflation, and they just stop rate hikes, right? And that's it. The next day the market goes up,
absolutely.
you are late to the game. So be
Absolutely.
exposed, right? Have some exposure, keep buying in. Maybe don't buy so much if you are scared. buy something safer, financials, REITs, again, if you're worried. But I think fundamentally, I would say always have exposure, right? Don't be 100% cash because you might not be able to catch it. And at least for me, I don't look at the markets every day or every hour, so I definitely
Mm,
almost won't catch it. So yeah, it's just a matter of waiting and waiting for the recovery to come.
got it. Thanks,
Yeah,
man.
for
And
sure.
Jeff,
Yeah.
yeah, go for it.
Um,
What's your take
I think
away?
I think for myself, I believe that like what Anthony was saying, right? It's always good to start building your war chest as well. If you're, I take a different view with regards to cash in such
Mm,
situation as well, because I think that while you can't time the market, but there's always indicators for you to look at, or rather you can start building your thesis right now. Just have a watch list, look at the different equities, and
mm,
see what you like and what you don't like, right? And if some of these equities are in your portfolio that you don't like at all, then maybe it's time to cut them loose once the market start recovering a little. That's one of the things to think about. And building a war chest basically means that you have some spare cash on hand, right? That's, I mean, like what Rakesh has been doing, put in DCA and everything, and you want to have some cash at the same
You,
time
you should you
to
should put your war chest in Anchor and earn 19.5%, right? And then that beats everything.
true. Yes.
Sorry, Jeff, I think you muted a bit. Oops. Ta-da.
Oh, good. Yeah, I mean,
Okay, yeah.
with
Anyway,
regards to
Anchor 19.5%.
yes,
Rakesh, look into it. Come on.
19, but I mean, yeah, of
Yeah, we've been
course, right?
talking
I
about
think
crypto for like the last 3 weeks, and nothing has been done.
yes, no, and I think like the best thing that we can do here is I think just be safe on your bets, right? That's the way. I think that's one of the things that I would say to our listeners and myself. I focus a lot, like I said, on the fundamentals. So if I'm happy with the stock, I go into it in the first place, even during this massive boom that we've had over in 2021 and in 2020. And I'm confident, right, that this company will bounce back. It may take 6 months, it may
Yep.
take a year, and yes, you can say your money's locked in order to keep that, sort of trying to make that money that you did make and now completely wiped out. But it will come back based on the fundamentals, and that's really what I believe. Of course, right? I'm still like everybody else, every other retail investor out there, scared to even open the app to look at how much I'm losing right now. So if
I
you
keep
are like
actually
that,
opening my bank app to check how much money I have left to put in.
really.
But
yeah.
I
So I
think
mean,
I've been playing with DeFi, right? So it's a bit odd. And it's difficult to keep
right.
track. But yeah, that's a story for
Yeah.
another day. Yeah, but Rak, let's finish this.
So yeah, I think with that, that's probably the best advice that I'd give. And I think take the opportunities, as Jefferson mentioned and Anthony mentioned, DCA, right? I've been taking Anthony's advice and DCAing until I don't have any more. But keep it going, guys. Keep strong. I know, right? If you've done your research, and we always beg you to do your research and not just listen to us, go for it. I'm sure you've made the right bets. Just wait for it, and it will come back up, right? History has shown that.
Yeah, as long as they're
Cool.
good companies, I would say.
Yeah, yes, of course.
Be sure
Provided they
about
don't go
that, right?
bankrupt. Yes.
Yeah.
But actually that's a really good segue, right? Because now we're gonna talk about two different stocks. I think one
All right.
specifically in the China market. So Anthony, why don't you go with that one?
Okay, cool. So the two companies are Tencent, which I assume most people have heard of, and C, which I assume in Singapore, if you have not heard of them, they own Shopee, which I assume you have heard of as well. So huge companies.
Yes.
In
E-commerce,
case
right?
you didn't know, yeah, e-commerce. In case you didn't know, Tencent actually had a huge stake in C. We have talked the
Okay.
last few weeks about Tencent being kind of seen as a VC bet, into China, not really just for WeChat and all that. And this is kind of a sign of it. So they were one of the lead investors into C over the past many rounds before they listed. They ended up owning 21% of C, right? Which is huge.
Okay. When was
and
this? 6
so
months ago? Or?
at listing they own 21%. So they must have
Got
built
it.
up a stake over the many rounds of fundraising. And yeah, the news last week was that Tencent would divest 14.5 million shares of C, right, and raise $3 billion USD in the
Wow.
process, right? I mean, yeah, you go right. Wow, 3 billion. But just a reminder, and to put into context as well, at September, look at the financials of Tencent. They had 40 billion in cash. So 3 billion is like nothing.
Oh, 40,
Oh,
right?
not yeah, 40, right? Okay, it's not nothing, but
Wow.
it's very, very minimal. And you think about the size of their stake as well. They sold 14.5 million shares. Their shareholding percentage went from 21 and a bit to 18.7. So they have sold 10%
Okay.
of their stake, slightly more. Again,
Yes.
not nothing, but not huge as well.
What was the reason
So
for this? Yeah.
they have been very fluffy about it. So what they have said is, oh yeah, we are taking. Essentially, they said we are taking profits, right? We want to reinvest it. We want to refocus. But come on, you have 40B, right? What's this tree going to do?
Exactly. Exactly.
They're going to pay lawyers that much? No, obviously not. So yeah.
But
Oh wow.
Anthony, so what's the
Yep.
implication of this though? Yeah.
I think there's a few implications on this. So the sorry, one last point about what changed is
Yep.
also they had this really C had this really weird, interesting share structure where Tencent and the founder of C had their own class of shares. So the two of them essentially control like voting and decision making rights and all that. And in addition to
Wow.
that, Tencent actually gave the founder of Sea Forest a proxy, essentially promising that however you vote, I will vote with you. Right. So it's a follow along.
Jeez.
And what
Yeah.
what they changed with this sale was also because obviously the shares of Tencent go to a third party and they don't want the third party to have that much voting say as well, right? So all of Tencent's shares are being shifted into the Class A shares which we buy and own. And that's that. So there's a bit of a change in terms of shareholding structure as well. But implications, I don't know, right? I think, well, first thing is once the share sale got announced, it dropped 10% on the day. So this was last Monday or last Tuesday, right? Just
Got it.
before
1 week
our last
ago.
episode,
Okay.
where 1 week ago,
Yes.
where we didn't read the news. So yes, we're talking about it this
Yes.
week. It dropped 10%. I mean, it's still going down. So it's dropped another 10% since last week, if not more actually. So yeah, it's just market sentiment. I feel. I mean, realistically, if we go back to fundamentals, I don't see any fundamental of C that has changed, right? They are still a good e-commerce company. They're still a gaming company at a very, very big stretch. You could say, oh yeah, Tencent's good at gaming. They had some synergies and partnerships there, and they might no longer be there. But come on, Tencent's still an 18% shareholder, right? They are still one of the largest shareholders in C. They
Correct.
will partner with them. And in any case, but Tencent's gaming is really focused in China, whereas C is focused in India and Brazil and the rest of the world. So they are not really competitors in that sense. So I don't see why Tencent would cut off its nose to spite its face and say, oh yeah, I don't want to partner with you anymore. Right? If everything has worked out and there's no like real rift or like egos coming into play.
Right. Yeah,
Got
but I
it.
think
So
one of the thing that's interesting is that Tencent's largest shareholder process, right? They
Process,
tend
right?
not to
Yeah.
own they tend not to own more than 5% of a company. So could that also be a reason why like they are trying to like process China's exposure? Essentially they are trying to limit their exposure to China itself through via Tencent. Yeah. Could that be one of the reason why?
I don't know. I mean, I don't think Process actually has that. I mean, they are still a relatively big shareholder in Tencent, but I don't think they have that much voting rights in that sense. So to be able to control Tencent practically in a way, and I think maybe a bit more of this is, and this is actually relatively interesting, is to remove that perception of C being a Chinese company, right? I mean,
Right.
Forrest is now Singaporean, ostensibly. He came from China, but there's always this impression when you talk about C that they're Chinese owned or they're Chinese controlled or there is Chinese link, and this is one step removing them or trying to remove them from that perception, which is again nonsense if you look at the substance. But whatever, sometimes people just want to look on the face of things.
Yeah, quick question, right? Do you think like, Tencent wants to take the money out because they expect that this sort of downtrend that we all are facing currently in the markets, and using that 3B, yes, it's not a lot of money, but maybe they can't touch the 40B for whatever reason. Use that funds to then go back into the market as a form of like you already said, divesting into other stocks that have gone down and they see better value there.
Maybe. I mean, it could very well be a capital allocation decision where they go, yeah, I could borrow from a bank at 2 or 3% interest rate because I'm investment grade. I could go raise a bond at again 2 or 3 or 4%, but I would rather sell my shares because I don't see it making 2 or 3 or 4%. Right. And so in that
Yes,
sense, it's relatively a better investment decision because they pay less in terms of their cost of capital. But
exactly.
then again, come on, it's in
It's
the
C.
equity
Yeah.
markets. you you don't tell me you don't expect them to perform like 3 or 4% in the medium term, right? So I feel like this is a bit more of a signal, and the reason why I say this as well is also because I think last month or 2 months ago,
Mhm.
Tencent also divested a much bigger part of its stake in JD.com. Right? We
Oh,
didn't talk about it
Yep,
because
yep.
there
Yeah, we
was a
did. Yeah,
news
no.
the
on that recently.
distribution of JD.com shares as a special dividends, right? Yeah.
Yes, that's right.
Right.
So Tencent is a relatively big shareholder in JD.com. They kind of distributing it to their current shareholders as a special dividend that's also about 16 billion in transaction value, so much bigger. And for that you can see anti-competitive behavior and all that coming in China coming into play, right? Because Tencent's a huge platform, JD is a huge platform. You don't want
Mm.
so much control in that sense. You don't want to be able to say that Tencent can control the market. So fine, you divest it, you realize your value, and you move on. But there's very little overlap here, so I don't think that same type of reasoning applies. But yeah, I mean,
Got
who
it.
knows, we shall see. I mean, I don't see this as bad for C, so I bought the dip and then it did further, which is not great. But oh well, maybe I should have looked at the 200 EMA.
Wow. Okay. So we have to see how this plays out because I mean, I think for our listeners out there, C owns Garena, they
Yep.
own Shopee, right? So gaming as well as e-commerce, and e-commerce is
Yes.
still booming like crazy. And I know I go to Shopee to compare with Lazada, and Shopee somehow is always cheaper. I don't know why, but in
Yes.
most things. So definitely, right, when you look at the fundamentals, I think it's a quick takeaway here. It's more the market
Mhm.
sentiment of one of its investors pulling it out for whatever the reason, right? I know there was a China
Yep.
crackdown into Tencent as well. Of course, I don't want to speculate what they discuss, what the government discussed with Tencent. Maybe this was part of it. Who knows? And they gradually have to, like what you mentioned, Anthony, right? Anti-competition rules, just get smaller exposure to these things and do whatever they want to. But that could definitely be it. But you think it's a good opportunity here for us to go into C? Is that right, Anthony?
No, I mean, look, I own quite a lot of Tencent, to be honest, and
Okay.
I'm beginning to own quite a lot of C. So I mean, I'm just talking my book here, but I
Yeah.
think I've always liked C. I just felt it was way overvalued at 300 or 330 or 350, whatever it was. Now that it's at
Mm,
160, it looks a lot more attractive, right? They're still executing. They're still executing well.
got it.
E-commerce as a trend isn't going away, so why not?
Got it. And it's interesting, right? Because the stock for Tencent did go up from 430 to 460 in that 1 week after they
Yep.
took the money out of C. And that's quite a bit.
Yeah, it's ridiculous. But I think China tech has been doing decently well this year, unlike everybody else.
Mm, yeah,
Yep,
yeah.
yep. That's
But
true.
they're so far
Cool.
underwater that it doesn't matter. It's like it's dropped 70%. I gained 10%. Ooh, no hooray!
Well, you're still gaining better than the rest of like the US
Yeah, true.
markets. It's just not. Jeff, any last words before we move on to the next topic?
No. I think Anthony covered most of it, so let's leave it as that. Yeah.
Cool.
Nice, man. All right. Last topic is a company called Synopsys, right? I'm happy to introduce that. I came across it just reading a couple of news, preparing for this podcast, and of course this live feed. So bear with me as I introduce you to Synopsys. Not many people may know about it. I know certainly I didn't. Anthony, Jeff, did you guys know about this
Mm.
company before
Nope.
I am about to talk about it? No. Okay. Cool. So Synopsys is actually a electronic, what they call themselves as an electronic design automation company.
Mm.
Effectively, they're a silicon company, and they design and verify chips, right? Semiconductors and manufacturing chips, right? So we have covered this, I think 2 months ago with regard to the chip shortage, the global chip shortage, right? That we've faced in Q4 and expecting to face in early 2022 as well. And that's what they do. So they do a few things. Number one, they design their own chips. They help other people design chips as well. And lately, in the past couple of years, they've also verified chip designs. So
Okay.
it's if I tell you a quick sort of supply chain is you design your chips, then you go to a fabricator to fabricate it, then you go to effectively a chip verifier to make sure that all of the parts of the chips is working well, and then at the end
Mm.
you want to efficiently use it with software. So they do effectively everything with the exception of fabrication, right? That's what I'm reading. Any of your
Mm.
listeners out there, if you have information that they have fabricated, please let me know, but I could not find it. So they do
So,
they
so,
do
so they're like Intel without the foundries.
yes, as far
Okay.
as
Yeah.
I can know, right? And they started off with chip architecture and only lately moved into verified chip designs a year or two ago.
Okay.
And they've sort of cornered the market as far as I can read into that space. I don't have the exact
Mhm.
figures in terms of market cap because semiconductors is quite convoluted, quite complex. But listeners out there, if you do like this space, please let us know on Telegram. We're more than happy to do a stock geek out on the semiconductor industry and specifically for Synopsys, right? So this is what they do, right? And their chips and their chip designs and the architectures are actually present in self-driving cars, any form of Internet of Things, consumer products as well, right?
Mm.
So that's pretty cool.
Okay.
They've been on the rise in 2021. Actually, I think they grew something like 14% from 2020 to 2021. And now having
Okay.
4.2
Wait.
billion,
14% share price or revenue or profit or revenue.
14% revenue,
Okay.
Wow. Okay.
right? To 4.2
Yep.
billion in 2021. Out of that 4.2 billion in 2021, Q4 attributed 1.1 billion. So we have seen
Okay.
that sort of growth that we saw in
Yeah.
Q4. And when we talk about it, Q4 was the time we talked about the chip shortage. So in order for
Yep.
them to have still an increase is kind of, sort of the complete opposite that I thought it was going to be. I thought it would be flat or it would go down because, well, people are not manufacturing chips as fast as they could and people need more chips. But it looks like
Yeah,
it's the inverse.
but I mean, I thought increasing revenues makes in the chip shortage makes sense, right? Because the shortage is there's too much demand. So to the extent that there's so much demand, all these processes about verification, maybe a bit of
Mm.
architecture, those will naturally also increase in a sense. I think.
Well,
I don't
verification
know
wouldn't, right?
enough.
Because it's
But yeah.
after the fab. But you're right. The design could be, and this is where actually they make most of their revenue as well, is they
Okay.
design the architecture. So you could definitely say that that's part of Q4, and that's what they're looking towards. Now, here's the thing
Cool.
as well. They have very, very good fundamentals. Their debt is at 600 million, and their cash in bank is 1.5 billion, right?
Oh,
And so effectively,
yes.
that's how much of cash they have, which is awesome. And
Finally.
just in yeah, and in their Q4 earning, their Q3 earnings call, they actually mentioned that they have completed a buyback of shares of 700 million, and this
Mhm.
is
Oh,
the
okay.
1.5 billion in cash is after that, right? Which brings me to my
Okay.
next point. Why did they do the buyback? These sort of things. But I want to dive a little bit into that, into what their strategy is, in this year and the next 5 years.
Yep.
But I think one thing to look at here is price to sales is at 12, price to book is at 9.
But
right?
but
So
I think they are not a tech company in that sense, right? So they're not going to have huge operating margins.
yes,
Maybe I don't know. And so you can't really give them like the price to sales of someone like HubSpot or
of
Amplitude
course
or
not.
like 30, 40, because it's just fundamentally a different nature of a company.
So yes, so usually I will look at this sort of industry prices out between 10 to 15. At least when I
Mm,
was looking at the industry wide, I was trying to make sense of all this data, and I do
yep.
see a range between 10 and 15. So it's there's somewhere in between. But I think before I just get back into the share buyback and what they're trying to do, what are you guys' quick thoughts on this company, on this industry? Maybe we can start with Anthony.
Cool. I think that again, riding on a trend. I don't know. I mean, from what we have heard, I don't know if it's that fantastic, to be honest.
Hmm.
And why I say that is this, right? So there's a company with decent amount of cash, and they are going on a huge wave in the industry, but they have nothing better to do except to buy back shares, right? They are not. I mean, they have enough cash to reinvest. They could do a lot of other things, but well, I'm just gonna prop up my share price and buy back shares. So to me, it becomes a bit of again a capital allocation issue, right? Every decision that they make, they have cash. What do they do with it? Should I grow my business, grow my revenue more, expand different product lines, invest in the future, or I return to shareholders, and they chose to return to shareholders, which is great as a shareholder, but
Absolutely.
but maybe can be a bit of a warning sign if taken too far as well.
Got it. Jeff, any thoughts here before I carry on a bit?
Well, I guess for my fund itself, it's really a matter of how well they can perform the R&D, right? Like you've mentioned
Mm,
already, good financials, fundamentals, even good approval of the management as well. All these are sound business model, like things that we look at. But like what Anthony was saying, there's definitely other companies out there that are also doing similar things. Like Samsung is also trying to come out with their own AI design chips, and
hmm
Google is also doing that as well. So what's the edge
What
that
makes this special?
Synopsys
Yeah.
is gonna put out there, and say, hey, we are gonna be the primary EDA supplier to the whole world in that sense. That's something that has to be and that has to stand out. And I think they had the run in I read into it a little bit here and there. They had a run in 2017, 2018, that period of time when Intel basically selected them as primary EDA
Mhm.
supplier.
Hmm
And look where they are right now, right? They are still not very well known in the market itself.
Industry,
um
correct.
so that's something that, to me, we definitely have to look into a little bit more, before I will decide whether it's worth a buy in that sense. Yeah.
Yeah, fair enough. And yeah, that's exactly what they're saying, right? So they mentioned that they were looking to get sort of this cash and reinvest in themselves, and they opened up
Mhm.
a AI development, or they just started this sort of AI where they want the AI to sort of develop chips, right, and create this architecture in the next 5 to 6 years.
Yep.
That's effectively their bet. That's why I believe they've done a buyback, because they do see the value in that company or in their own company,
Right.
and or they feel they have too much cash, right? uh, that could
Having too
be.
much cash.
But so they've started this AI department that's looking for it to grow, looking for it to scale. On my side, I think I'm going to keep a close eye on this. I again completely agree with you and Jeff. I don't know where they're going to be. I don't know what is their full USP. Maybe
Mm,
it's the execution that they will go ahead with the AI, because you've got Google behind it. You've got a lot of other companies who are looking to grow into this, right? But
yep.
I think one thing to note though is that their internal employees love working there, and they actually do approve of management, right? So one of the things that I look at when I look at stocks is
Okay.
I look at the um Glassdoor, right? Just like every
Mm,
interview that you go, you look at Glassdoor. I look at Glassdoor for stocks, but I also look at where they're hiring and how fast they're hiring, and they seem to be hiring quite a fair
yep.
bit with regards
Okay.
and globally as well. They have an office in Singapore. I didn't even realize. Um,
Cool.
So that's pretty cool as well. I think it's good just to keep an eye, have a look in this industry, and I think it's one industry I'm looking to dive a little deeper in as well in the semiconductor space.
Yeah,
Yeah,
I
I
I
mean,
I mean,
semis are interesting. Go ahead, Jeff. Go ahead.
yeah, it's definitely an interesting space to look into, right? Because Synopsys has always been more of a company that, like, I'm still gonna hop on the point where they are trying to come up with their own chips, right? But it has always been a
Mm,
company where it does chip design software kind of thing. Like, even if you look into like all the different AI chips that are being designed by or built by Samsung and what's not, they are all using Synopsys. Um, so they're using this tool called DSO.ai,
mhm.
which essentially
Mhm.
is something that has been far reaching, and a lot of the other companies have already been using for a very long time as well. But for Synopsys to, come out with their own chips itself, to me it feels like a slight stretch in that sense, because you gotta have the whole infrastructure to build the hardware, right? It's a
Yes,
totally different ball game and cost altogether. Whereas like Samsung, Google, they already have that capabilities that already built out there. And in fact, like Synopsys is also have a direct competitor in the software space. Cadence, that's another one to
Mhm.
look at as well if you are into this. Yeah, so a lot of things could change in the next couple of years. But I think the barriers to entry for them to build their own chips or microprocessors is definitely one that is very high. Yeah.
Okay, wait. Sorry, Jeff. Just one question. That I think you were mentioning that these chip designers all kind of have to use Synopsys,
Yep.
in their chip design process, right?
Yes.
So
Yes.
in essence, they are a bit. If I can draw a very bad analogy, I'm assuming it's bad. They are a bit like, Adobe. They provide you the software to read PDFs or to, like, design and all of that. But now they want to be the one actually making the design,
making it.
right? That's
Yep.
a
Yep. Exactly.
slightly different. If that energy is, even roughly correct, that seems to me to be a relatively big jump in skill set, right?
Yeah.
And they are saying,
Yeah.
"Oh no, we are not doing traditional chip design. We are going to do it by AI," which
Yes,
again, it's not necessarily their forte, right? Unlike Google, unlike all of that, who have AI expertise in from other segments they can pull in. So, it feels, as we talk about it, that this is just, oh yeah, I have buzzwords and I'm just going to keep doing it, right? Because I mean, if you're going to really compete in AI, compete in machine learning, one B is nothing, right? Google can throw multiples of that at a problem. So why are they doing it? Again, back to capital allocation. Why are they buying back shares? Why are they not, really competing and really investing in it? I think that's my question. Which, well, maybe we read more about it. We'll find out, and then 6 months later, we know the answer to it, or Thomas can come on Stock Geek Out to tell us, or Reggie can come on Stock Geek Out to tell us this is why you're wrong. Fine, I'm more than happy to be wrong, but I think at this very initial stage, something feels slightly off. For now.
Mm.
Yep. Yep. Yeah. I agree with you. Yeah.
Cool, cool. Yeah, cool. I think that roughly wraps up the market update. Woohoo. All right, we
Oh,
finally
great!
managed to finish one episode where we're not only talking about macro. So
Yes.
it has been a pretty a pretty week in the form of news. It's just been a rough month for all of us. But Anthony Jefferson, let's keep on chugging. Let's keep going, and I'm
Yep.
sure we'll see some rewards, right?
Yeah,
Yeah.
we
For
will.
sure. For
I,
sure.
I'm
Yeah.
confident my portfolio double in 3 years. I just need to wait 3 years.
Oh, I wish I had your confidence, to be honest.
That's how I
Optimism
keep buying,
overflowing.
man.
Awesome, guys. Again, if you haven't followed us, please let us know what you think about this episode on our Telegram, on Facebook, on Instagram as well. Please go ahead. Otherwise, you can email us at hello@thefinancialcoconut.com. If you do want us to dive into any of these stocks that you've heard, we're more than happy to do that in the Stock Geek Out. So please let us know as well. All right. We'll see you guys next week, and have a good week ahead and stay safe. Bye.
All right. Take
Bye.
care, guys. Bye.